In this video, I'm going to show you how to mark your premium and discount positions using the Fibonacci and also waiting for price to come into your premium for sales and into your discount for buys. So in this case, I'm going to do more exercise on sales because right here, you can see that price is trending to the downside. And now we're anticipating for price to consistently go to the downside. So what we do, we use the Fibonacci, we put it on the high and on the low right here. So this is the low. I'm going to outline the highs and the lows that I'm going to be working with. This is the high and this is the low. And then we'll have this high. So right here, you can see this is the high, this is the low, and this is the high I'm working with. And after price created this low, you mark the Fibonacci from the high to the low and look at how price came into a premium. Now you're looking for key levels that price is going to come to the premium to retest. And right here, we'll have an inefficiency. Price tapped into the inefficiency right there very nicely. You look for sales and then we'll go to the downside. Then after we'll go to the downside and run this low, what you do is basically the same thing. Now you just clean your chart. And then now we're working with the new current high and the new current low right here. So this is the new current high and this is the new low. Then you use the Fibonacci from the high to the low. Right there. So once price is at this premium position, you are looking for sales from this premium position. And as you can see, we have an inefficiency right there. So you're looking for price to come into this inefficiency. And right there, you can see how price mitigated the inefficiency. And after that, we displaced to the downside, came back up and dropped down, breaking structure. Now, we've broken structure. This becomes our new high and this becomes our new low. So I'm going to wipe my chart. So right here is the new high and right here is the new low. I use my Fibonacci, put it at the high and then the low. As you can see, price came into the premium again. And what did we come into the premium to mitigate? An inefficiency right there. The moment we came into this inefficiency, you're looking for sales. You're looking for a smaller time frame shift to market structure. So in this case, we're working with 3 months, basically for people that want to do swing trading. This concept is something you can use for investing in the long term. I'm also going to show you how you can use that in crypto and stocks as well. So right now, we're talking about how to do that on euros. So it's for people who have very busy schedules. You can basically just do this at your spare time, at the weekends when you have free time. Spend 10 minutes, do the analysis, mark your premium and your discount key levels, and you wait at those key levels for price to come in there. I'm also going to do more details explanation of the entry model you're going to be using to get into the market, even though in the previous episode I talked about it. But in this one, I'm just focusing on the premium and discount key levels. So right here, you can see after we tapped in here, dropped down, came back, tapped in here again in the premium, and then we drop down. So this would have been another opportunity for you to sell. This would be a first opportunity to sell into this inefficiency. The inefficiency is going to be your exit position. Right here is your entry. Right here is also your exit position. And right there, we tapped into it. This would have been a good opportunity to go to the smaller time frame, look for sales, break a structure, and sell this to the downside into this key level. And then coming in again, you look for sales again and sell it to the downside. So now we're in the current price action. All you do, still the same thing. This is our current high and then our current low. Then you use the Fibonacci again, put it at the high, put it at the low. And right here, we come into the inefficiency. You can see that. And that would have been an opportunity for you to sell. And right there, if you had sold this to the downside, you would have made profit. Now let me show you. Right here from this high to this low right here is about 750 pips. So if you were risking $10 per pip on this trade, tapping into this inefficiency, in as much as it looks really small, but if you had risked $10 per pip, you would have made $7,000 just on this small move right here. That's how much you would have made. So I'm going to end this one right here. And if you have any questions, you can let me know to explain in more details.